Hello everyone and welcome back to TradeSmart, where we test and code the best performing objective rules-based strategies into TradingView scripts, making it easy for you to automate your trading. A few weeks ago I stumbled upon a simple yet profitable strategy on Transparent Trader's channel. So shout out to Transparent Trader, he makes really good content. Also, my version of this strategy is not 100% the same as his, so feel free to check out the original video for the full strategy. Link is down in the description. The strategy itself is based on a very simple 3-candle pattern. Just like with any other candlestick pattern based strategy, the first thing I did was to open up a TradingView chart and set up our pattern analyzer script. If you don't already know, with the pattern analyzer script, we can set up and backtest nearly every candlestick pattern based strategy. I was able to recreate the strategy instantly and found that despite its simplicity, the strategy works remarkably well across crypto, forex, stocks and indexes. So in today's video I will explain how the strategy works, how you can trade it manually, how you can set it up with our TradingView script, and then we'll show you the results for the best performing assets and pairs. Also, if you want to try out and automate this strategy, you can get access to the script shown in today's video and to many other scripts that we developed so far by becoming one of our supporters on Patreon. Link is down in the description. Without wasting any time, let's get right into it. Okay, for this strategy I will show you two versions. A simplified version, which only includes the base logic, and another version with two filters that can make it even better. First, let's start off with the simplified version. For the simplified version, open up the indicators tab and we will add only one indicator, which is the squeeze momentum. Add this one to your chart. Once you got that, open up its settings and change the KC length to 10. The squeeze momentum will be used as an exit signal indicator. The basic version of the strategy is already set up in our script, so I will enable it and let's see an example. Here we can see a valid long signal. I also have to mention that this strategy is long only because short trades aren't generating as much profit. For a very long entry, we want to see 3 green candles. Each new candle needs to be bigger than the previous one. So as you can see, this is the first green candle and this is the second one. Clearly, the second one is bigger than the first one. And as you can see, the third is even bigger than the second one. How do we make sure that they are getting bigger and bigger? For that, you can use a simple tool, which is the date and price range. And you can see that this candle's height is 0.21% or 5,500 pips. The second candle, from bottom to top, is a 0.47% movement and 12,000 pips. And the third is around 1.48% and almost 40,000 pips. So as you can see, all of the 3 candles were green and each candle was bigger than the previous one. That means we can enter into a long position. Entry level at the close of the signal candle or at the open of the next candle. With this strategy, I didn't use an exact stop loss, but in the script I set up a 10 times ATR distance for the stop loss. You can do that by using the NNFX ATR indicator, or you just don't use any stop loss. The squeeze momentum indicator will help us with the exits. We will exit the position once the squeeze momentum indicator, which you can see on the bottom, turns from green to red. And that happens right on this candle. So, after the close of this candle, the strategy would have exited the position. And if we take a closer look, you can see that this movement was a 1.97%. Let's see another example, then I will show you the version with the filters. Okay, here is a valid long entry signal. For a valid long entry, we need 3 green candles. The second candle needs to be bigger than the first one, and the third candle needs to be bigger than the second one. So let's measure their height. The first candle from bottom to top, including wicks, is a 0.97% movement. The second candle from bottom to top is a 1.78% movement, so it's bigger than the first one. And the third candle is a 2.12% movement, which is even bigger than the second one. So we can enter into a long position at the close of this candle or at the open of the next candle. We don't have to use any stop loss, but if you want to, you can use what I set up with the script, which is a 10 times ATR distance. We will exit the position once the squeeze momentum indicator turns from green to red. And that happens right here. And as you can see, the strategy exited the position on the next candle's open. This trade would have been a 3.22% movement. Now let me show you the other version with the filters. The filters I'm going to use is a simple trend filter, which uses the 100 length SMMA, which is the smoothed moving average. Also, we will use a simple RSI filter with a 14 length and a 65 level long boundary. Let me explain. First, open up your indicators tab and let's add the SMMA, this one, then the RSI, this one. Once you got that, let's change their settings. First, open up the SMMA and set its length to 100. Then open up the RSI settings. Then go to the Styles tab, untick every option except the RSI and the RSI upper band. Finally, change the RSI upper band value to 65. With that, we have all of our filters set up. Okay, here we have a valid long entry signal. Again, make sure that you only take long positions, as this is a long only strategy. For a valid long entry, again, we need to see 3 green candles. The second one needs to be bigger than the first one, and the third one needs to be bigger than the second one. Also, on the signal candle, the price needs to close above the moving average, which you can see right here. And the RSI value needs to be below 65, which is right here. All of the conditions are met for a long entry, so we can enter at the close of the signal candle or at the open of the next candle. We won't have a fixed stop loss, but as you can see, with the script I used a 10 times ATR distance stop loss. So if you want, you can use that. We will exit the position once the squeeze momentum indicator turns from green to red. And that happens right here. And as you can see, the script would have exited the position at the open of the next candle. This trade would have been an amazing 7.51% move. Let's see one final example, then I will go over the results. For a very long entry we need 3 green candles, the second one needs to be bigger than the first one, and the third needs to be bigger than the second one. If you are not sure about their height, you can use the date and price range tool and measure their movement in percentage from bottom to top. First one is 1.16%, the second is around 1.44%, and the third is around 2%. But there are 2 more criteria with the filter version of this strategy. First, the signal candle needs to close above the moving average, which you can see right here. And on the signal candle, the RSI needs to be below the 65 level. And as you can see, all of those conditions are met, so we can enter into a long position at the close of the signal candle or at the open of the next candle. We won't have a fixed stop loss, but if you want to use one, you can use the 10 times ATR distance. Finally, we will exit the position once the squeeze momentum turns from green to red. And that happens right here. And as you can see, our script exited the position at the open of the next candle. And this trade would have been even better than the last one with a 10.7% movement. Okay, are you ready for the results? Let's see. Let me show you the best results for an asset in each category, so crypto, forex, stocks and indexes. Let's start off with crypto. For crypto, the long-only 3-pattern momentum strategy with a 0.05% commission and a 3-tick slippage performs exceptionally well on the Bitcoin versus USDT pair 2-hour chart. Over the last 5 years, it executed 274 trades, netting a remarkable 324% net profit with a 2 profit factor and less than 20% maximum drawdown. The strategy works similarly on the 4-hour chart with slightly less net profit. When applied to the daily chart, it achieved a profit factor of 11, but with only 125% net profit. Now applying trend and RSI filters, we get some interesting results. On the 2-hour chart, while it lowered the net profit to 119%, the profit factor increased to 3 and the maximum drawdown reduced to 14%. This indicates a lower risk version of this strategy. The 4-hour chart again gave slightly less net profit, but a higher profit factor and significantly reduced maximum drawdown. Some other noteworthy crypto pairs are the Ethereum USDT with and without filters, AAVE USDT with and without filters. Moving to stocks, where I used the same commission rate as before. First of all, I have to mention that on stocks the strategy has a low trade count, which I'm not fond of. Despite that, we have a few great performers, for example Netflix 1 hour without filters. Over the 5-year backtest period, it executed 102 trades, accumulating 119% net profit with a 2 profit factor and only 12% maximum drawdown. With filters, the 1 hour, 2 hour, 4 hour and the daily is also profitable. Before moving on to Forex, here are a few other stocks that generated great results. Meta with and without filters, and Shopify with and without filters. Okay, now let's see the best performing Forex pairs. With Forex, I used the 3-tick slippage as commission. A standout was the 2-hour chart of the Canadian dollar versus Japanese yen. Over the last 5 years, the strategy produced over 200% net profit with 242 trades, a 1.7 profit factor and only a 19% maximum drawdown. There were several other Forex pairs that performed remarkably good. Here are a few examples. Lastly, considering indexes and metals with 0.05% fee and 3-tick slippage, daily charts seem to be the sweet spot. Crude oil, natural gas, NIFTY, silver and gold were profitable without filters. The lowest time frame which gave me great results and more trades was the 2-hour chart on Nikkei. But again, in my opinion, because of the low number of trades, it makes it incompatible for trading. To sum up, this seemingly simple strategy is surprisingly effective, particularly in crypto and Forex where trade count is also good. However, when dealing with stocks or indexes and facing lower trade counts, a possible strategy is to trade all profitable assets simultaneously. This approach can provide and yield a healthier trade count and increased profits. But also remember, this is not financial advice, we are not financial advisors, always do your own research. Also, I will leave a link in the description of the results of all the profitable pairs I found. Do you have any other candlestick pattern based strategies that I should try out? Let me know in the comment section. And with that, as always, thank you all for watching. If you like this video, don't forget to drop a like, subscribe and turn on the notification bell. If you want to try out the script I used for this strategy, check out our Patreon and become a smart trader today. Also, if you are interested in other candlestick pattern based strategies that I created with this script, check out this video. And with that, I wish you an amazing week and see you in the next video.